So welcome back, and thank you for joining the last panel for today, which is Out of the Box, Finding the Future of Aquaculture, Technology and Innovation. The aquaculture industry has come a long way in the last decade with heavy innovation and technology. However, there's still a huge room for development, so we'll definitely have a lot of topics to explore and discuss today. Just a quick note, my colleagues at IntraFish are covering the event live, so you make sure to check our website for any live updates and social media as well. We're using the hashtag SeafoodInvestor20. So very quickly, I'd like to introduce our panelists. If you can all turn on your cameras and microphones. So we're joined by Bryton Shang, the founder and of Aquabyte, Matts Johansen, CEO of Aker Biomarine, Joost Matthijssen, he's the director of venturing with Nutreco, Maren Hjorth Bauer, founder and managing partner with Fynd Ocean Ventures, and Nolan Paul, partner for global food and ag tech lead with Yamaha Motor Ventures. Beyond the major seafood deals we report on, there has been a long list of venture capital and risk capital investment in small-side seafood-related companies. Just the few names to mention, we've got Google Ventures in the space, Rabo Ventures, Tyson Ventures, Chevron Ventures. The list can go on for ages. But so far, those have been a bit focused on alternative proteins, biotech, and software. So I'm going to turn it to you, Joost, since you lead Nutreco's venture arm. I want to ask you, what is Nutreco's philosophy on its investments, given that it functions within the aquaculture space? And why have you chosen the investments you have, Blue Nalu and Viaqua, to name a few?
Sure. So Nutreco, of course, is a strategic investor in this space. So we invest for strategic return and to have access to great technology that we think can make a difference going forward. Our mission is feeding the future. So we take quite a broad lens on that and a very broad interpretation as such. So ranging from things that are close to our core business, which in this case is aquaculture feed. So Skretting, of course, is the largest global producer of aquaculture feed. We are looking for external ways to make that better. We're also looking to branch out into new variations there. So digital soft services, for instance, in the case of Vaca, or health feed additives, which is less close to home for us, but an extension of our current business. But we're also looking further down the value chain, if you will, integrating into raw material production, for instance. So supplying some of our own needs through new technologies through our investments, as well as to move beyond the feed link and towards the farming side. So we have also invested into land-based farming, which I think was discussed extensively also yesterday. I think even further away from our comfort zone is an investment into Blue Nalu, because of course that is about food for human consumption and not feed. So there we're really branching out to explore the strategic potential and opportunity for a company like Nutreco in that emerging value chain for cell-based seafood in particular, and alternative food proteins more broadly. And to your question about how do we select our investments, we always look for technology that makes a difference in terms of value creation whenever it has to do with protein production, in this case seafood production. There has to be strategic fit, so we have to be an added value partner that really can accelerate the development of the technology and the adoption of it, and to be a meaningful partner for the companies that we invest in. And of course, we look for the best teams in the industry, people who can really execute on their vision, and who can complement some of the skills that we bring to bear with drive and execution power to really make things happen. Because I think there are lots of great ideas in this space, but it really takes the technology that works and people who can get behind their vision and really execute to make all of that happen and to realize all the value that's potentially there.
Sure. I was going to ask Nolan a question. If he's there, if he can please turn on his webcam as well and join us. But for the sake of time, I'll move to you, Bryton.
I am here if you can hear me. I just can't turn on my webcam. I'm sorry.
Oh, no problem then. Let's go ahead with you. So I wanted to ask you, as someone from outside the aquaculture field and more into the ag tech sector, what advice or lessons do you have from Yamaha Motor Ventures philosophy that can be used for aquaculture? And just explain to us why Yamaha, which is most famous for its motorcycles, is interested in ag tech and aquaculture?
From what specific point of view? From an innovation standpoint?
Yes, please.
Yeah, I would probably answer it from maybe not from a Yamaha standpoint, just broadly, just the learnings we see in agriculture, which is certainly actually, maybe I'll ask you, sorry, just one more time, is I guess broadly kind of what are you looking for kind of from an innovation standpoint, from a technology development speed, just to make sure I'm answering the correct way.
So I've heard also that you've led Driscoll's Open Innovation Program. So with taking that in mind, so apart from just Yamaha, what was your experience on how that industry embraced innovation through culture, through company culture, through structures, through process and people?
Got you. Okay, yeah. So two probably different things. One is, from an incumbent standpoint. So if you're a grower or a marketer within the space, I think it's there haven't been great examples in my point of view of companies being able to completely just renew and have a culture of innovation. There's been a lot of cases of that, people trying to do that, starting groups, and it failed. I think you really need in many ways to structure the innovation around the culture and the vision of the company. That's not always the sexiest thing or the most exciting thing, but I think it's the most pragmatic way. You need a strong leader, and I think the vision needs to be strong. And you really need to understand where the company, where the competitive advantage is, and invest strongly there. And I think that's probably the most important thing that we've seen in getting the whole company to really to galvanize around that. I think probably the biggest errors we've seen in the failings are when R&D or innovation is not aligned with the commercial side, and so you don't get that adoption once something's ready. You create sort of some challenges, kind of in distrust between innovation, R&D, and the commercial side. And on the flip side, though, it is important that there are new things, disruptive technologies and products that need to come to market that will always be stymied through the commercial side of the business. And that's where you really need to probably develop those in an independent way, white label outside of the business.
Thanks, Nolan. Bryton, you're also relatively new to the industry, having worked your way through several tech startups before you founded Aquabyte. You've also previously mentioned problems with seafood being out of the mind of venture capital investors. How do you think the industry can highlight itself better to the market?
Right, well, I would say just practically speaking, just because there isn't a lot of aquaculture happening in the US, I mean, relatively speaking, and for folks, for example, inside the Silicon Valley bubble, it's just difficult to even know how to diligence a deal in aquaculture, or even what a farm is or how it operates. And so a lot of that is just really just practically creating bridges between aquaculture and these investors. When we were raising capital, for example, like we had just set up like video chats and show them what a farm is like, and like have them talk with farmers and just to get a sense of the industry. We had a couple investors even come to Bergen, Norway, tour some farms. I know there's some other initiatives. One is, for in SF, there's like this Oceans Group, a bunch of investors in SF trying to make a trip to Bergen to see what fish farming is all about. And I think it's initiatives like that that's really allowing investors to get more exposure to aquaculture in general. And I'd say like there's other organizations that we've seen that are trying to bridge that, though I think from an investment standpoint, there is, yeah, I mean, I think the space is relatively underinvested relative to the amount of capital looking for opportunities, and from a venture capital perspective. And yeah, well, a lot of the startups in the space are more kind of the traditional organic growth type companies versus venture capital backed type growth companies. And I think there's opportunity there.
Maren, Fynd Ocean Ventures labels itself as having a slightly more modern mindset than traditional funds. Can you walk us through that mindset of buying into ocean-focused companies with a sustainable value chain?
Yeah, so we, I mean, to build on what Bryton just said here, I think there is definitely, the ocean space is definitely an overlooked or underfunded from a kind of startup scale-up standpoint. And I followed this space closely the past years and looked at thousands of startups in this space and scale-ups, and it's really a kind of inflow now, really interesting companies coming with leveraging new technology to build solutions for the aquaculture sector, but also to kind of develop new materials, nutraceuticals, health, and so on. And those are the type of products or companies that we look at with Fynd. But to our approach here, I think you know, we want to be a strategic investor and really work and collaborate with other funds in this space and other investors to catalyze more capital into this space. And we built a team, you know, both the core team and the people around us that have really long experience from these sectors can really be a strategic investor that also de-risks the investment for investors that doesn't have any experience investing into this space. So I think just yeah, really collaborating with funds, both early stage and later stage, but also at the same stage is really important for us. We've had we had conversations with Joost previously as well, on, you know, discussing, you know, if there could be relevant things we could do together. So I think that's one part of it. And then the other one is that we will be kind of take some of the kind of best approach from the private equity sector, working hands-on with the companies and be more of a strategic partner to the companies we invest in addition to a financial investor, to really leverage our network to support these companies to grow and create value.
Matts, we haven't heard from you yet. People typically think of innovation as moving fast, but some of Aker Biomarine's breakthroughs have been years in the making. How do you balance those, and how does the company culture play a role in this innovation?
Yeah, so I think kind of, even if it goes slow in Aker Biomarine, it still go quite fast. So we're very focused on going what we call fast and relevant. And when it comes to innovation, I think for us, it's kind of, it's driven by two things, and it all comes down to culture, as we heard a little bit earlier. But it's driven by passion and the risk appetite. You know, so that you need an organization and you need people that kind of want something. They want to change something, or they want to improve something, and they have that clear vision. I mean, that can be leadership, but I think like in a big organization like us, it has to come from, you know, every single employee that's working in the company. And then it's kind of more like in the structure or in the system or in the leadership, the willingness to take risks. And that's something that I'm very focused on, because it's human nature not to take risks. You know, and if you look at kind of how to develop your career the best possible way, is to not take risk. You know, is to kind of sit quiet in the boat, wait for an instruction, and you know, do what you're told. So I think we as leaders, and I think especially me in Aker Biomarine, I play a very important role to kind of carry the risks on my shoulder, push the organization, you know, to explore, to say yes to things, you know, kind of looking for those type of new opportunities, even if that sometimes mean there will be some chaos. And I think maybe the industry that, you know, if it's in the aquaculture or in the fishery industry, it's kind of like a little kind of, how to put it, conservative industry. I don't think there's a lot of craziness and a lot of kind of saying yes to crazy ideas, and especially these entrepreneurs coming up. We have these big companies here that have so much capital, you know, and so much profits that they can use to kind of fund and say yes to crazy things. And I think that's something that I'm preaching in my organization, trying to work with those kind of startups that approach us. And I also hope that the kind of industry can learn from that and you know, come with open arms to everybody that's trying to have a vision and try to change something for the better.
So, yeah, Maren, you had something to add.
Add a bit to that, because I think that's, you know, what the past years also worked a lot with established industry players, and there's really, I think there's an inflection point now where there's also a generational shift in some of the, at least the family-owned aquaculture players, where the next generation taking over, more focused, you know, on both ESG and also more curious about leveraging new technology. So this is really an exciting exciting time. And I think also, like Matts said, be very, you have to be structured also about innovation and set aside time really to explore new areas, gain new insights, and also be bold and bring people from completely other sectors with different perspectives into the mix to add diversity.
And you need to have patience. I mean, you can just take the Aker Biomarine case as an example. I mean, it's been 14 years, $800 million invested. That's what it takes to build a new resource, like krill, like no one had done it before, to build up the infrastructure, the technology, the science, the market development. I mean, you need that type of capital and that type of patience to actually build something new.
Sure. Contrary to the traditional or conservative mindset, Bryton, you're known for having a Silicon Valley mindset. What hurdles are faced by innovation tech startups getting into seafood from that perspective?
Well, I think when I mentioned that, I mean, I think it's more kind of the speed at which we're trying to innovate and get into the market. I mean, for us, it was really just, 2 years after conception that we're already starting to commercialize and get a product out there. And so it's something where certainly working with the pace of the farmers that are perhaps used to taking a bit more time to make decisions or try out technology. I think also just practically the geographic nature of the business makes it difficult in terms of, I suppose if you're all in like one place in Norway working on it, it's like easier, but for us, we're geographically dispersed, and we're also considering multiple geographies, Norway, Chile, Scotland, and other places, and so that just creates an additional layer, for example, versus other folks building businesses that's just fairly virtual. And so I think it's that, and also just the speed at which we sort of iterate with our customers, and that's something where fortunately farmers are very open to like innovating with various companies and just sort of let you on the farm and try things out, and that's been really conducive to the quick development as well. And then I guess lastly is really just this approach towards data software technology versus more kind of traditional hardware technologies, and being able to apply some of the business models we've seen successful in other types of Silicon Valley type companies, applying those to aquaculture. Sorry, one last thing to add to the last question, and I think we've also seen interest from sustainability investors in the space, and that's also been a source where we're able to kind of bridge that gap to aquaculture, and also even like tech companies like Amazon, like we did a TV episode with their CTO, and it's because of this whole sustainability and aquaculture contributing to that. That's like a really compelling factor for a number of investors coming into this space as well.
Sure. Joost, I'd like to take your opinion on that, not just about the hurdles in the way, but what innovations exactly do you think the seafood industry is overlooking?
Yeah, maybe to build on the point that was made earlier, I think I like Matts's call for more crazy ideas, and I agree with the point. There's some conservatism in the sector overall, but generally I think, and of course I have the comparison between the livestock industry, where we also try to do the same thing. I think the fact that aquaculture is so much a younger industry in and of itself, our technology has been more front and center to a certain extent. I think there's also a certain level of openness, and of course I'm biased by my main counterpart in Skretting. I'm fortunate enough to be in a position that they're mostly open to crazy ideas and willing to consider them, and I think that's the basis for the corporate startup partnerships that we have set up with companies like Viaqua and Cellabs. But indeed, it's a balancing act, because you need to have crazy ideas that are exotic and new and innovative enough to really make a difference. But of course, at the end of the day, they have to be integrated and to be scaled up in such a way that they're palatable and applicable to enough contexts. And for a large company like ourselves, that means that they also have to fit into maybe a slightly different box than how they started out. I think to the other part of your question, key industry innovations for the industry. I think I mentioned a couple already in the form of, for instance, land-based or nutrition and raw material innovations. I think one area that we're particularly excited about is on the health side. I think fish and shrimp health continues to be a challenge for the industry, with substantial room for improvement. There we see lots of opportunity to address that through non-veterinary type of interventions. Health ingredients, feed additives, feed supplements, things like that, as well as better diagnostics for farmers to really diagnose the health conditions of their animals on site, with lower effort, more real-time inputs or insights, and putting them in a position to act in real time. An example there is our investment into Viaqua, that has a total novel approach of developing feed ingredients for shrimp health. And there we are acting as a co-development partner to help bring that to fruition, and contribute to that development, as well as help bring it to market. So I think that's a key area, and I think, of course, Bryton is probably better able to talk about the potential of digital, and how much precision farming and precision feeding in particular could benefit the industry. But I think that's also an area where we're keeping a close eye on. We see there's lots of potential room for improvement in terms of both technical farming performance, as well as sustainability gains, and just overall cost efficiency of farming performance, where different combinations of hardware and software can really be impactful. We have that experience firsthand from our investment into Vaca, an Indian-based company for feeding equipment, where we're rolling it out in Ecuador, and there putting the right data at the fingertips of the farming operators can really make a significant difference. So that's also an area which we continue to look very closely at.
Sure. Building on all those examples you just gave, Maren, looking generally at the aquaculture industry, and you mentioned de-risking before, what do you think is holding the industry from taking more risks on innovation?
I think that it's something about the kind of conservatism, but I think that's very closely linked to kind of the both aquaculture industry and the fishery industry kind of being primary industries for a long time also. So this transition happening now, towards more precision farming, leveraging new technology and all of that, and that's kind of we're in the middle of that shift, which is challenging for people. And the sector is also quite fragmented, and you have some really big players, but also a lot of small ones that doesn't necessarily have the capacity and competence to make use of new technology and invest in those type of solutions. And I think for those smaller players as well, it's kind of naturally kind of the main focus there is on the kind of day-to-day operation and what needs to be done. So I think that's really one part of it. And then I think also it's been maybe a lack of or there's, I think right now there's an increasing number of clever people, engineers, people like Bryton and others starting companies in this space. But that's a quite new thing also. So it's very nascent from kind of startup perspective also. So I think this is, all of this is, in the middle, it's shifting right now.
This is Nolan. And maybe just to add to that, I think what we see across the spectrum from farmers, whether it's plant crops or livestock or seafood, is, certainly, I think they get labeled as being conservative, but certainly they are very innovative stakeholders. And it usually comes down to poor or not well-defined ROI on certain new technologies, where the ROI, the risk-adjusted ROI, is clear. You will see adoption. The challenges, as we've talked about, is some of the new technologies. Even if you can quantify what it's worth, they're not perfect yet. There's still risk in being able to deploy it. And so, how does a customer then, how do they think about paying for that and adopting it across, an entire company, where if it goes down for a week, they have a serious problem. So I would just want to add is, where one, a new technology is able to have a very clear risk-adjusted ROI, I do think you see adoption, and then also being able to de-risk. Probably best to do that from a business model standpoint, how to de-risk the scale up of that technology with a customer. I think we've seen is really important for that initial adoption.
Sure. I'm going to switch it a bit over into financing. So, Matts, in your opinion, what are the risks and rewards of public listing for a company with early stage technology?
I mean, I think it's both. I think that the main benefits is that you get much more visibility. So, you know, people are going to see, press is going to write more about what you do. And I think you're going to be scrutinized harder, you know, if you don't deliver on what you say you're going to do. But if you have control over your kind of visions and what you want to, you know, achieve, I don't see that as a problem. And I can kind of speak for my company, you know, where we got listed this summer. And I would say for us, nothing has changed. I mean, we're still the same company. We still, you know, say yes to things and do crazy projects and kind of drive forward. And at the same time, we need to make sure that we can deliver on the expectations that we create ourselves towards the market. So I think that's just positive. And then on top of that, you get access to capital, which, you know, makes it easier for you to kind of go after those ideas that you have. But I would like to kind of also follow up on some of the discussion we had on ROI right now, because if you kind of look at the type of innovation that Aker Biomarine is working on, and or what the whole company is built around, which is krill, a new resource, right? And it takes a lot of investment to come up with new source of protein. And I guess it's the same for the insect-based protein. It's for the algae businesses that are trying to develop EPA and DHA for the aquaculture industry. And the problem is that it's more expensive than the already scaled up industrial ways of doing it. But it's the right thing to do, and we have to do it, right, to kind of move in the right direction to solve some of the biggest challenges we have. So, you know, and like Aker Biomarine is a very good example. We had to lose money for many years, you know, to be able to get that scale. And luckily we had some owners that were willing to do that. But I think also then the industry also here plays a key role to kind of look beyond just the financial ROI, to say that we have some bigger challenge that we need to solve. And we need to kind of look at the CO2 footprint. We need to look at the marine footprint and the sustainability of what we do, and actually make sure that we are part of developing these type of solutions as well.
Building on that point on ROI, Nolan, if we can bring you back for a second, what do you think is needed? Do you think it's patient capital or steady nerves to de-risk the sector?
You know, I think that's a good question, and I certainly think that this space needs patient capital. But again, it comes down to, you know, the investment timelines can be longer, but then the returns can't be the same, because then it just becomes a bad investment. And so, you know, I do think the type of investor is important. I think we've seen more strategic investors in the broader ag and seafood space for sure. As Bryton mentioned, it's difficult for traditional VC investors to really grasp, you know, these types of new technologies. And then, you know, I do think the point that was just made is, you know, there is going to need for new technologies that require a lot of investment. There is going to be the need to subsidize them through forms of funding to get there on scale. And I think it does come down to the business models. At the early stage, a lot of times change than kind of compared to what it looks like at scale. And we see this, you know, for examples where companies will start, at least on the robotics or the hardware side, will tend to kind of go to market more in a service model, and then shift to a lease sales model as they kind of get to the better scale there. So I think those would probably be the main points that I have.
Joost, what are your thoughts on that in terms of needing patient capital or steady nerves to de-risk the sector?
Well, those two can never hurt, of course. I think I would agree with that statement in the sense that you know, the statement earlier was that, you know, VC has overlooked somewhat of aquaculture, and I would agree, right? I think there's lots of opportunities here, and technology could really be a meaningful enabler, and therefore drive value creation. And I think that's ultimately what VC is after. I think, of course, but VC is particularly well suited for things that scale quickly and in an asset-light way. And there's definitely opportunities that look like that in the aquaculture space. And I think probably what Bryton and team are doing is an example there. That is purely technology driven, and there's a pathway to scale in a more asset-light way. But if you look at, for instance, Matts' company or other people who have a more asset-heavy model, requiring more continued R&D investment, and especially investments into large assets, and that's probably a model that is not particularly conducive to at least traditional VC. So there's definitely a big role for VC to play, and I do believe that it takes a mix of different investors with different type of mindsets, right? I think VC, general tech VC, or ag tech VC is more and more discovering the perks of aquaculture. I think there's more mission-driven investors that start to embrace this space, and typically that's a source of patient capital, with a slightly different return expectation, but with of course other requirements that they would have to fulfill. I think the biggest single question mark is there a room for investments requiring heavy assets that maybe do not necessarily have a very high margin to begin with. And then I'm thinking about things on the nutritional side of things, where it's pretty hard to scale up any type of new raw material production, given the fact that you need to build large assets with a somewhat uncertain market. I think that's a bit of a conundrum that's still unsolved, and there we're trying to also be a strategic partner for key innovators in that space to help bridge some of that gap by helping them develop their proposition, securing offtake, and supporting them to attract financing. And I think there's room for people who have a slightly different investment approach there. If there's a way to get even more patient capital and more private equity type of funding to things that have slightly de-risked already on the technological side and just need further commercial scale up, I think that's a bit of a funding gap that I see on some of the propositions in that space. And of course, there's a role to play there for investors like ourselves that provide a strategic perspective and can invest maybe larger sums of money than just the typical VC allocations. And I think that's also something we'll probably increasingly see going forward with some of the propositions that are now beyond the emerging scale and more in towards the growth stage. I think that's also something that will be more relevant going forward.
When we talk about a structure of the company, Matts, Aker Biomarine has a long history in the seafood industry, but it remains standalone. Could it be a platform for more growth? Does it fit better within a larger company, or do you think that innovative groups should stay as standalones?
I mean, it depends a little bit on the culture, So I mean, Aker Biomarine has grown quite substantially the last year. So we are a $250 million revenue company now, and still very innovative. But I think generally it's much easier to innovate when you're small, and we are experimenting a lot inside Aker Biomarine how to run innovation projects. To kind of put them outside the rest of the organization, get them dedicated, focused, like an accelerator that can drive innovation faster. And we are experimenting with different models for how to kind of get speedy and relevant innovation. But I think generally small is good when it comes to driving innovations fast.
Bryton, based on your experience, what do you think, since you've worked with several tech startups before?
I think in terms of
whether you think that innovative groups should stay as standalones, or should they be a platform for more growth?
I don't know if I have a strong opinion on that. I mean, certainly we've seen that. I think it really depends on culture and ownership. I mean, certainly you have these large companies incubate projects, and it's a little bit different than if you have kind of the founder and like some employees that all have equity in the company, and they're just scrappy and working together to get something because their livelihood depends on it. I think that's like a different motivation than if you have, I don't know, working in a large organization where it's like a bit more comfortable, and so that is sort of like one perspective. Certainly, I think if you can leverage the large organization to have like distribution or marketing benefits, that's certainly something. Though, yeah, certainly I think the model that's worked well in Silicon Valley, at least, is like folks leaving to start their own things and then incubating it as like a new startup versus starting it within another company. Though certainly both models exist, and it also probably depends on like if it's asset light or heavy business and how much investment it requires to get to a product, and if it is a digital technology you can get out relatively easily, then maybe a bit more attractive to have it standalone. But
Sure. For the sake of time, I'm just going to go around the room for some final thoughts. It's been a brilliant discussion, and we'll definitely follow up on all this. But if I can start with you, Maren, the digital flood has really lifted other ag tech sectors, but it hasn't took the aquaculture sector by storm just yet, but of course it might be coming. What do you think is the key element? What will it take, and what's the main focus?
Main focus for the aquaculture sector
Yes.
If you think about digital technologies and not kind of new materials and so on, I think precision farming, being really what some of the things that Bryton is doing, really decision support making tools for the farmers to understand what's happening in the pens and to use that real time to make the right decisions. I think that's definitely a key area. And then I would like to just add something as well, which is not something we touched upon that much in this panel. That's also, I mean, I think just the whole lab grown seafood topic, which is they've also invested in some of that. I think that's also a very interesting space to follow. I think that's this sector should really follow closely as well.
Definitely. Nolan, what do you think will it take for us to see the same digital flood in the aquaculture sector?
I would say if you look in the agriculture side, it's still early days as well, but probably 5 to 10 years ahead of the aquaculture space. If you look at the timelines there, a lot of companies came out that probably in and of themselves were solving one thing that's important, but not, probably needed to be consolidated. And I think we will see that when you see just broader platforms. I think that's when you'll see easier enterprise adoption. And then I think the second thing is the folks who will be the most successful are the ones that don't just talk about data, because data in and of itself really doesn't mean anything. It's hard for people to grasp what it is. It's actually what is that data represent, and it's actually solving a specific problem. I think the companies that are able to speak about it in those terms are the ones that are able to articulate their value proposition better.
Matts, what are your thoughts on that?
No, I think key areas within sustainability, and I think we haven't touched on that now, but the taxonomy that's coming in Europe, that's going to be very demanding, I think, for the whole seafood industry, aquaculture, everything, both when it comes to CO2 footprint, but also the kind of the marine biodiversity and how the impact is of that. So to have innovations that are focused on how to have meet those requirements, that's coming very, very fast, and it's going to change the industry totally.
Joost, your thoughts?
So on digital, I think Nolan said it well. That is definitely coming, but crop farming is 10 years ahead. Livestock farming maybe not so much. I think there we see also the same challenges we see for aquaculture. It's finding technology that really works and drives better farm returns. It's not just data is not enough. And I think there the challenges are very different for the different farming system and the different species. So I don't think there's a single answer to that solution, but I do see some more convergence and some more tech coming into the space from other sectors, and I think that's encouraging. And maybe to follow up on what Maren said, the alternative forms of seafood, of course, are definitely something that will impact this market. we think they're both a threat as well as an opportunity for players in this space. Seafood is a very particular market, and some of the established players could also play a big role in the alternatives that are now coming up, whether they are plant-based or fermentation-based or cell-based. I think definitely the speed of development is very encouraging. So probably some of you have seen the news today that the first cell-based chicken product has been approved into the market in Singapore. I don't think it will take a very long time for the first seafood-based alternative to follow suit. There's people really pushing that envelope, and one of our portfolio, Blue Nalu, is definitely amongst those. So I think that is also something that will be impactful for the seafood industry overall. But I think generally, the growth of seafood is really strong and encouraging, and I don't think it's necessarily a harmful development. Rather, I think there's definitely overlaps that could be leveraged for innovators that have an interest in both, whether they're corporates or startups. So definitely a trend that we continue to be closely monitoring and want to be a part of.
Bryton, your final thoughts?
Yeah, so I would agree, and I would say, I mean, certainly automation, big data, AI, machine learning, and aquaculture are all big trends, and I do think they are trends that, like, now is the time we're actually starting to see, like now is the time for those trends to actually take off. I'll just give one example. I mean, for us last week, where saw the news in Norway where the Mattilsynet approved Aquabyte as the first like technology to be able to count sea lice automatically, and so an authority to say that like big data AI method is accepted in the industry is really setting a precedent for kind of other AI technologies to be accepted in aquaculture. And so I think that's really positive sign for further developments and other technologies to come in and help develop the industry. I think the other thing, and also sort of ties to the last question you asked, is if this data, and what Nolan was saying, is if, for example, this data can be synergistic with other companies out there, data from the farm that's useful for feed development, for the fish health side, then I think that's where you can see, for example, powerful kind of alliances between data and existing companies where that data is helping transform how the feed industry works or how the farming industry works. And that's where, for example, operating within kind of larger company could make sense. But I think really, again, now is a time where we're seeing a lot of these AI machine learning technologies actually take grasp in aquaculture.
Thank you, Bryton. And thank you to all the panelists for taking part in this. For the sake of time, I'm going to turn it over to Drew, who's going to give his closing remarks for the Seafood Investor Forum. Thank you again.
Thank you.
Thank you.
Thank you.
Well, thank you to all the panelists, and thank you, Demi. That concludes our event. I just want to say that over the course of the 2 days, I've learned so much. One of the silver linings that we've had is that we've been able to bring so many people together, not just our panelists, but also the audience. And that diversity, I think, really shows the excitement in the sector. And it really shows where this sector is going from a place of having an incredible raw material to now diversifying into ESG even more, diversifying into technology, all in the service of food security and sustainability, trends that are really going to be critical as we move forward in the coming years and decades. So again, wanted to thank our sponsor, Antarctica Advisors. Want to let you know as well that you can find our lineup for 2021 on webinars at IntraFishEvents.com, as well as our planned in-person events as well, which we're all very hopeful that we'll get to see one another in person. And you can also on IntraFish.com follow along with our coverage. We want to hear from you. So please drop a line, editorial@intrafish.com. Let us know what you thought about the event. Let us know areas that you think we should be covering more, because there is so much excitement happening out there. and we're very happy to be a part of it, very happy to be following along. So thank you all so much for joining us. We'll look forward to seeing you at the next IntraFish digital event.